Why are we cutting rates at all? Economics 101. And today's lesson, the Federal Reserve and interest rates. The rate we're talking about is the Fed funds rate. It's the rate that the central bank uses to dictate what banks will lend between each other on an overnight basis. It changes the cost of credit. It can stimulate growth or it can restrain an economy. It's typically lowered very quickly during recessions or on the prospect of a recession. Here's 99, but this is the Great Recession, of course, lowered very, very fast from nearly 6% right the way down to just 0.5%. And then it's gradually raised when the economy is healthy, which is what you're seeing over there on the far edge, the 9 raise stages that we have seen. This will see, if they cut tomorrow, by the way, it will be the first of a downward series since 2008. Today, the US economy is looking healthy by most metrics. Growth is solid, 2.1%. Donald Trump says he wants it higher. Well, let's see if he can do that. 4% seems a long way off. Unemployment, 3.7. That is the stellar performing part. And in fresh inflation figures at 1.6 shows getting closer to the Fed's target. The current Fed rate is 2.5%, higher than most other countries except emerging economies. Donald Trump's chief complaint says that this 2.5% puts it at a disadvantage compared to the UK at 3/4, the EU at 0%, Japan negative. There's a lot there to take in. Luckily for us, Mohamed El-Erian is an advisor at GIC, and he's with us. Good to see you.
Good to see you.
Make yourself comfortable, sir.
Thank you.
Now, first things first, is a rate cut tomorrow, which everybody believes, I think you probably believe too, is going to happen, is it justifiable?
It is not justifiable on traditional metrics. As you pointed out, our economy is doing fine. In fact, we got very strong numbers this morning on consumer confidence. So if you look in terms of your traditional metrics, it's not. The justification the Fed is going to make is twofold. One, they're going to say we need an insurance cut because the rest of the world is hurting and we don't want to be contaminated. And two is that the PCE, the 1.6% you showed, is below our target. What I really think is happening is they're unwinding a mistake. They made a mistake last December. They shouldn't have hiked last December. That fourth rate hike was excessive, and they're just trying to take it back.
Right, and if we look at the graph of the Fed funds rate, the steep decline, of course, from 2008 was entirely justifiable. The slow rise up again, does it make a difference if you just take one back?
So it shouldn't make a huge difference.
There you are. I mean, what difference will it make if you just nudge off one notch?
So ironically, where it makes a difference is in the rest of the world. The rest of the world sees this as either being forced or being able to relax their monetary policy. So what we're doing, we're creating an umbrella for everybody else to loosen the monetary policy. That is why the dollar is not getting weaker as the president would like.
Explain.
So normally when you lower interest rate, you attract less capital because people earn less. And that brings pressure on your dollar, on your currency. But what's happening now is that the rest of the world is being even more dovish than we are. Mm-hmm. So our currency today is at the strongest level it's been all year. And that's quite an appreciation since the start of the year.
Which makes the president's call for an interest rate cut somewhat justifiable in that sense. But it also shows the lack of understanding at the numerous currents underneath that really dictate the economy.
So two things. One is that it's justifiable in terms of what's happening elsewhere.
Right.
And it's justifiable in terms of most people would agree December's hike was a mistake. But you know, this is a political equation. It's a win-win for the president. If the economy slows, who do you blame? The Fed. If the economy does well, who do you say? It's because of me, despite of what the Fed did. So politically, it's a win-win situation.
But economically, one can't really justify this particular cut.
Correct, and economically, one can't justify politicizing the Fed.
But listen to, the president of Mexico has also seemed to take a leaf out of President Trump's book in terms of how he views the ability to cut rates. Have a listen.
They are more cautious. They are more cautious about inflation.
No está mal. Pero es importante bajar las tasas.
That is not a bad thing. This is not the wrong thing to do. I'm not saying that. But it's important to lower rates to encourage growth.
Lower rates to encourage growth is fine when inflation's not a problem. Inflation's not a problem, is it?
No, because of what's happening to price discovery. You and I, through what I call the Uber effect, the Google effect, and the Amazon effect, have taken pricing power away from people who sell it to us.
But everything you are taught in economics and everything that I've ever understood suggests with an unemployment rate at 3.7%, growth of 2 to 3%, interest rates should not be near zero.
You're absolutely right. So you have to understand the reason why interest rates in the US are so low is because of Europe. They are negative in Europe. You have $13 trillion of bonds trading at negative yield. People are willing to give their money to either a government or a company and pay for the privilege of doing so. You will find no textbook that has this in there. But that's the amount of distortions that have been created in the global economy.